Rishi. Thanks a lot for taking the time out and speaking to CNBC TV18. We have to wrap up this conversation, but thanks for leaving us with some ideas. So they like IT services. You're getting into that space. By the way, the market is a bit choppy. A lot of heavyweights are putting a bit of pressure on the market, whether it's Reliance, ICICI Bank, TCS, ITC, all dragging the markets lower. Nifty is down about 28 odd points. But let's get back to some of the big corporate stories that we're tracking. IGL, Indraprastha Gas, was in focus yesterday. The company and Genesis Gas Solutions have entered into a joint venture agreement to set up an integrated smart meter manufacturing plant. Now, this is a deviation from IGL's regular business. They have a capex plan of 110 crores. The plant will be operational by 2024 and will have an installed capacity of 1 million meters annually. To discuss this and the company's diversification plans, we're joined by Sanjay Kumar, who's the managing director at IGL. Sanjay, thanks a lot for joining in, and tell us a little more about this whole smart meter manufacturing plant venture that you've entered into with the Genesis. It's a deviation from your regular business, so what's the rationale behind it? Are you already getting some orders? And apart from the investment that you'd have to make, do you have everything else in place, like the technology, etc.?
So thank you, Sonia, for having me here. First thing is that this is we do not see it as a deviation from our regular business. Actually, we have been buying about 0.3 to 0.4 million meters per year from the market. So it is only natural for us to try and see if we can establish that business ourselves and compete in the market. The domestic gas market primarily is about 1.5 million meter market per year. So companies are buying about 1.5 million meters in a year. And the government is pushing for more and more houses to be connected with pipeline gas. So which effectively means that if the growth explodes in this segment, then we may have a demand of 5 to 6 million meters per year in next 7 to 10 years. And that is where the market that we had seen. And we have partnered with Genesis Gas Solution. We have 51% in this company, and 49% is held by Genesis Gas Solution. There will be equal number of directors on the board. The company will start operating in 1 to 1.5 years. Initially, we will be selling meters based on imported kits, but very soon we will be manufacturing the whole meter in our plant, and we hope to have about 1 million production of the meter per year going forward.
Okay, so there's 1 million production. Mr. Kumar, yes, the total investment, we do know that it's about 110 crores, and I guess it's a partnership of 51-49, so we know that. Can you tell us what is the revenue opportunity that you see with this JV, and will it only be restricted to, this JV of course will be restricted to smart metering, but are you also looking to, branch out into other areas, whether it's EV stations, LNG supply?
So, in this particular opportunity, we are looking at meters of different kind, whether prepaid, whether AMR meter or the domestic normal meter. We are looking at EV and all these things coming forward. 1 million meters will be produced in this particular company per shift. So, and the total turnover in a steady state may be about 150 crore or more than that, depends on the pricing in the domestic market of the meter. We are also looking at export opportunities. Now, I come back to the question that you raised about diversification into EV, etc. All those opportunities are being evaluated, and we will be coming up with different announcements in these opportunities, whether it is hydrogen or EV or solar in few months.
Okay, all right. Hi, Mr. Kumar. You've given us a fair understanding, but I want to understand this gas smart meter market. How big is it, and who are the competitors out there? The likes of listed companies that we have, Genesis Power and all, they are not in this space, right? They are in the other smart meters, not in the gas smart meters.
So it's about the current capacity of meters in India is about 0.8 to 1 million meters per year, and the sale of these companies is limited to 0.6. there are 2-3 parts in a meter which is imported, which is even today mostly imported. Some companies have started making all other parts in India. The diaphragm is still imported from Europe. So the total capacity is likely to be utilized, including our meter. There are some announcements also, some other players are also announcing. It will be a competitive space and we are aware of that.
Okay. Mr. Kumar, I'm just going to zoom out and ask you a strategy question. I've been listening to you. So IGL is looking at smart meters. You mentioned EVs, a lot of these, side business areas, whereas your competitors are getting extremely competitive and aggressive in the main core business, and that is, city gas distribution. I'm referring to Mahanagar Gas's recent moves. They've acquired a company to boost their volumes and have bigger presence in Maharashtra and Karnataka. I'm not asking you to directly comment on that move, but is that a shift in strategy? You're looking at satellite areas, your competitors are getting more aggressive in the core business. Aren't you looking at investing more in actually gas distribution, increasing volumes, getting into newer areas?
Thank you for the question, Survi. Actually, if you know the business very well, you know what are its pitfalls also. So we need to, it's all value game. What kind of value you attach to an M&A transaction. And we are analyzing these opportunities. We would make appropriate value calls. We will take appropriate value calls on these opportunities. In this one, we were also a bidder and we could not succeed. It finally, Survi, depends on the amount of money that you are bidding, actually.
No, I totally hear you, because that was a conversation we were having, Mr. Kumar. Mahanagar Gas has, I think, paid 6 times, if I'm not mistaken. And the company was a loss-making company, obviously hoping to turn profitable in future. But again, let's move away from that transaction. So you tell us, in terms of the investment that you will make in the core business, you couldn't get this one deal. What are the other deals that you would look out for? What are the other geographical areas where you're hoping to ramp up to boost those volume numbers? Your volumes are, I think, just above 8 SCMD at the end of the third quarter. Let's talk about boosting the core business, volume outlook, how much organic, and can you do inorganic moves, let's say in the next 6 to 12 months?
First thing, Survi, is that I have never made any comment about MGL's transaction. I would like to be very clear about that. About IGL, I would like to tell you that presently we are selling about 8.25 million cubic meter per day. By the end of next financial year, which is 2024 March, we would be selling estimated volume of about 9 million cubic meter, 9 to 9.25 million cubic meter per day. And the year after that, about 10 to 10.25 million cubic meter per day. So that is our game plan. About the EBITDA, we hope that we will continue. The Kirit Parikh committee report would be implemented very soon. And we would be able to maintain our EBITDA target of 7 to 7 rupees 50 paisa per SCM going forward in these years also.
So will you at some point be looking to hike prices in the near term? I mean, compared to all of your peers, I think IGL was the only one that didn't hike prices despite an overall hike in pan-India prices. Is that your plan, that perhaps in the near future prices could go up from your end?
So we have a very customer-centric management here, and we would not like our conversion rates to be, affected by higher price. And that's why we have maintained the price, at a very moderate level. In fact, if the Kirit Parikh committee report comes into implementation, we may consider reducing the price a bit so as to maintain the purchase of CNG vehicles by the customers, because that is where our bread and butter lies. So the cash cow remains our CNG business, and we would like to maintain that, and hence the strategy, of pricing. We are taking a very conscious call on the pricing.
All right, got it. Mr. Kumar, very quickly before we let you go, you briefly mentioned about the conversion rate. I think that dipped a little bit in February. Could you give us an updated number? What was it?
No, we are not aware of February, but in January it had gone up by about 10%.
Mr. Mr. Kumar,
in January, it had gone up by about 10%, from 14,000 to 16,000 in January. I would find out about February because I did not get the opportunity to go through Karim.
Okay, Mr. Kumar, the takeaway, I think, from this conversation is that you're, of course, very keenly focused on the core business as well and looking to grow. How much cash setting aside for acquisitions?
Yeah. Acquisitions are a very, confidential strategic discussion that we are having. We would only like to assure you that when there is a good opportunity, we have sufficient money in the balance sheet to go for such acquisitions. It has to be value for money, actually. That is the key concern that we have, because we have been doing this business for last 25 years and we understand this business very well, actually.
Okay, so I just want to clarify on one thing. You said that the turnover from smart meters could be 150 crores and this is in the first year, is it? By FY25?
No, steady state. No. I said in steady state, when we are producing 1 million meters, we will have turnover of 150 crores.
Okay.
The return from this project is very good, actually. The estimated return is, more than the hurdle rate that we have.
Okay, which is what?
The companies have different policies. It could be 18, 20%, something like that.
Oh, okay. All right.
It's more than that.
Okay, got that. Thanks a lot for joining in and explaining this to us, the new area that you're entering into, smart metering, as well as the fact that your cash cow remains the CNG business. Thanks a lot for joining in. Let's slip into a quick break. That's a big move on IGL that you've seen in the last many days. Today as well, the stock is up about 1%. On the other side of the break, Abhay Soy of Max Healthcare will be joining in to talk about the occupancies and their business outlook. Later, we'll connect with Vijay Banka of Dwarikesh Sugar Industries and Sanjay Kumar of ICICI Securities to discuss the possibility of an additional export of 1 million tons of sugar. Stay tuned.